I'm Hannah Wallace and welcome to FinextraTV. Kindly calling into our virtual studio now is Monica Eaton-Cardone, COO and co-founder of Chargebacks 911 and FI 911. So welcome, Monica. Thank you very much for calling in.
Thank you.
It's good to have you on. So yes, today we're speaking about what strong customer authentication means for authorization rules, declines and fraud levels, an area stirring a lot of debate recently. But one big question that still remains is how it will impact chargeback rates, right? So it's not as simple as saying chargeback rates will simply reduce once strong customer authentication has been fully enforced, is it? And this is one of the points I want to cover today. So yes, let's kick things off by talking about how strong customer authentication will impact the way chargebacks are being filed, and are there any reason codes that are now redundant? So by no means a small question, but we'll start there.
Sure. So it's often a misconception that if a merchant has implemented 3D Secure or they have two-factor authentication, they're SCA compliant, that miraculously they will have no more chargebacks. Factually, SCA and two-factor authentication, so let's say you're using 3D Secure and you have all the latest, greatest tools, this is only going to help you reduce chargebacks for those chargebacks that were filed under the reason code of fraud. So imagine if I'm a consumer and I file a chargeback saying it's identity theft and two-factor authentication was used, 3D Secure was used, well then that will the chargeback won't stand. Either the issuer will prevent that chargeback from being filed, or it will get caught likely by the acquirer. Regardless, the merchant won't experience a chargeback. Now, today, the majority of chargebacks for e-commerce merchant are under fraudulent reason codes. So logic would suggest if fraudulent reason codes go away, then most chargebacks will go away. But like we've seen, and history repeats itself, when VCR rolled out with Visa, when we had the EMV shift, fraud just migrates. And what we believe is probably going to happen and what merchants should be prepared for is they'll get the same amount of chargebacks. They'll probably experience a slight decrease in total chargebacks, but the industry will catch up. And instead of receiving chargebacks that have a fraudulent reason code, they'll receive chargebacks that have a service-related reason code, a canceled recurring reason code. There are, lots and lots of reason codes. So to tell a consumer that is trying to get a refund for whatever reason they have, that, if we close one door, chances are they're going to find another door, maybe a window, maybe the chimney, but they're going to get a way to get that refund.
All right, that's interesting and leads me quite nicely into my next question then. So how will liability for chargebacks change when SCA is fully implemented? What about that?
So for merchants that have fully implemented SCA, then they'll notice a slight decrease in the fraudulent chargebacks, but not really a decrease in their overall chargebacks. What this means is that merchants will have more opportunity to dispute invalid chargebacks, friendly fraud chargebacks, service-related chargebacks. Merchants should have greater insight to understand what really caused the chargeback, because it's not going to be as easy for consumers to simply say, the transaction wasn't authorized. It wasn't me. I don't know anything about this. This is great for the industry because it's really going to advocate getting information that the merchant needs to really understand what's causing the chargeback. So lots of good news for the merchants that implement SCA, and they'll have a shift in getting more data to understand how to work with that. But additionally, something that's important to understand is it's not just the merchants that are going to benefit from some of the data exchange here. It's also the issuing banks and the acquirers.
Right, that's interesting. So from your experience then in this space, can you highlight how financial institutions can respond to these changes? What about that?
Sure. So I think financial institutions, first of all, everybody needs to be prepared for SCA. It's not something, it's already instituted, and it's not going away. It's going to continue to advance, as we've seen. So making sure that you have technology that can identify whether a transaction was placed using a 3D secure method is super important. For acquirers, it is absolutely vital that acquirers understand, their transactions that are chargebacks, the fraud. In doing so, of course, they can apply for exemption, and this is going to help improve auth rates. But it's a balance, right? You have to make sure that you're not taking in too much fraud, and you're implementing 3D Secure wherever possible. So making sure that acquirers are paying attention to the statistics, have technology to scale, and for issuers, understanding in real time when they need to, advocate more information from their cardholders in order to avoid those fraudulent disputes.
All right, with that in mind then, we know SCA has had a big impact on e-commerce, but has it had the same sort of impact on continuous and recurring merchants? What about that?
So SCA does have an impact on all merchants across the board, any transaction that is online, of course. When it comes to continuous subscriptions or recurring billing, the thing that's important to remember is that the only transaction that is going to be protected from a chargeback that is filed as fraud is the very first transaction. So with recurring subscriptions, merchants need to be very aware that all of those subsequent transactions don't have any liability protection. So make sure that you stay in communication with your customer, because you're not going to avoid a chargeback by using SCA on those transactions.
There you go. Some very good advice there, Monica, to end on. So again, thank you so much for calling in. It's been a pleasure, and thank you for clarifying a few things today.
Thank you.